Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Checking in on Twitter, GoPro X, and CHK. So the Twitter bulls are showing up, and they got that follow through with the big bull volume. You can see it was a very clear volume spike. And there are often times where I'll compare volume in the first hour of trading, and I'll compare it to previous days. And when you see something like this, where the volume is pretty steady and straight across here between 9 and 11 million, and then you get a day where you have 23 million shares traded, you can tell in the first hour of trading that the volume coming in is going to be very significant compared to the previous days. And that should tell you that the bulls have a lot of momentum. So if you see something like the first hour of trading, you have 25% of the previous day's volume, you know it's going to be a big day in whatever direction that initial hour has gone. So that is something that I will use to compare the first hour of trading, and it has definitely helped in the past. So we did get a break of this level. We were looking for a break of 1722 for the bulls to show up and get our little higher low and higher high, and clearly other traders were watching that level as well, because as soon as this broke, the volume poured in. Bullish MACD cross is trying to get on deck here. We've got all moving averages as support, and we're now looking up at this top, a little top here at 1872 before we saw the significant pullback. So we got up today to 1838. We're making our way to that resistance, but still a lower high until that breaks. So looking at it on the weekly time frame, the bullish reversal doji off the middle Bollinger Band last week, big time follow through this week. And looking at the daily chart, I would be surprised if we could break 1872 without a bit of consolidation, but it's entirely possible. Tomorrow will be very telling. If we do consolidate, the bulls want to back test and hold the middle Bollinger Band at the worst in terms of giving back profits of this 2-day move. And if we can consolidate, hold the middle Bollinger Band, and then make a continuation move, breaking these lower highs, that will obviously favor the bulls going forward. But if we do see follow through tomorrow and break the high of today of 1838, we're looking right at that 1872 level, and that would be a great way to end the week if we could break this lower high pattern that we've been in for the past 2 months and be looking back up towards the high of this bull move of 1979. GoPro, still very weak, but we're building a base of support. And right now, if you were to zoom in on the hourly time frame, this is a descending triangle pattern where you have a horizontal base of support and lower highs as the price tightens. We're continuing to reject against the exponential resistance with upper wicks of profit taking. The past few days, we've tested those levels, and it's all about support of 760 and 757. Break 757, and we're looking down at the all-time low, and the bulls have to break the exponential resistance along with the high of the bounce attempt of 799. So this has been a really nice bear play. The all-time low is down at 714. Not a lot of supports. If we break 757, we're heading down to that level. Just this weekly lower Bollinger Band, and we have tested this 3 times in the past 4 months, and we've bounced off of it each time, holding that support. So it is worth keeping an eye on that level. If we were to close tomorrow below the lower Bollinger Band of 769, that would be a very clear bearish indication heading into next week. X on the daily time frame. Bulls have to be pretty pleased with today after the bearish day of yesterday, seeing profit taking. They're holding the middle Bollinger Band on the back test of 2086, and what this is doing is setting up a very tight range where we have our high of the breakout, or I shouldn't say breakout, but the high of the oversold bounce, then our low of the consolidation after it. Now we have a lower high of 2175, and the bulls need to break 2175 to be ending on a strong note heading into next week. If we close below this middle Bollinger Band, the bears are right back into control, and we're close to breaking this weekly potential bear flag. Inside bar on this week is very, very likely to form, and we'll be watching the range of this week into next week to be looking at which direction we're going to break this channel on the weekly time frame, as that's going to give us some nice indication of some midterm gains looking multiple weeks out. Whether we close above resistance, the 200 week, or close below support, the 100 week, we can anticipate a couple weeks in that direction when that does happen. CHK on the daily time frame is dumping lower highs and lower lows. Nice resident bear list here, and certainly fitting that name as we are breaking down. So as soon as we broke $5, that was game over for the bulls in the short term, and that happened down, where were we here? Back here, losing $5 support, closing below it, saw a short-term bounce, just another lower high being set, falling back down, increasing bear volume. And looking on the weekly time frame, this is what the pattern was based off of. And when I first started doing these CHK videos on this list, I wasn't making any trades on it. I was just watching the setup. I was watching the longer term pattern, the descending triangle pattern of the horizontal base of support and the lower high range as we get tighter and tighter. This week right here, the end of May, we lost $5 support. We closed below that level. It was the lowest close we had seen in over 6 months. And from there, we had a bear flag, reject from exponential resistance, and now the bear flag has been confirmed with another dump to the downside. So this is an ideal scenario for the bears. Once we lost that $5 support, the next level that we were looking at was down at 475 and then down to really 430. So here we are down at 438, and the bears are in absolute full control, close at the low of the day, and if we break 438, we are looking down at 430 as the next level. Bears own CHK on the daily and the weekly time frame right now. So that's what we've got heading into tomorrow. I will see you all over the weekend. Thanks for watching.